Products and Services, a Business School module. It's now time to begin considering exactly how you're going to earn the number you wrote down in your workbook in the previous segment. By doing this, you're beginning to develop what's known as a business model. What may come as a surprise to you is that even within the interior design industry, there are dozens of different business models that could accomplish the same financial goals. Those who do not achieve their goals are most often those who have not focused on a clear business model, resulting in the weakened position of trying to be all things to all people, the worst possible strategy. Imagine for a moment if you had no overhead expenses. That would be wonderful, wouldn't it? And remember, you also have a number in mind, your earnings goal. Right now, we're just going to try and see how much time and product you need to sell in order to meet that number. Yes, these will have to be adjusted when we add in your overhead expenses in the next segment. But the process will be the same. So let's just learn the basics here. Let's take the simplest possible example. A sole practitioner wanting to earn $50,000 a year, a very reasonable goal. The billing rate is $100 an hour. So question, pop quiz, how many hours would this individual have to bill? Well, that's pretty simple, isn't it? 500 hours. The math, 500 hours times $100 an hour equals $50,000. Now, as an aside, it's often helpful to convert that number to weekly. 500 hours divided by 50 weeks in a year, I'll give you 2 weeks vacation, equals 10 hours a week. So, question, can you do that? Can you bill 10 hours a week? Well, now we get to start thinking about scenarios. What if you were able to bill 20 hours a week? Would that change your earnings goal? What if you were able to raise your hourly rate to $125 an hour? And how many hours at $115 would it take to earn $100,000, not just $50,000? Please become familiar with these simple what-if scenarios. I'll show you how to solve them in just a moment. If you have a firm that is more than one person billing, you'll have to derive a blended rate, but don't overcomplicate it. Suppose you bill $125 and you have 3 other employees who respectively bill $100, $75, and $65. You'll just blend these numbers to get an earnings goal for a firm. It's simply the total billings of the firm divided by the total hours billed by everyone who bills. For example, if this firm billed $321,800 in a year, and these 4 individuals combined to bill 3,500 hours, then the firm's blended hourly billing rate would be $91.71. Now let's change gears for a moment and suppose that you sell product only. Again, don't make this unnecessarily hard. Just simply divide your earnings goal by your average profit margin on product sales. That's all there is to it. Write that down. Divide your earnings goal by your average profit margin on product sales. If your average profit margin is 40% and you want to earn $50,000 exclusively on product sales, it's simply $50,000 divided by 40%, shown here as 0.4, or $125,000. Voila! You'd have to sell $125,000 of product to earn $50,000 with no overhead. As I promised, we'll get to that. Most interior design firms, as you're probably aware, work with a combined model. The most common have some sales of time or time billings and some product sales. Can you do that math? For example, if you bill 200 hours at $75 an hour, how much product do you need to sell to have total earnings of $50,000, your earnings goal? Now, this may look a little bit like high school algebra, and I suppose it is, but it's really simple and it's about all you need. So I urge you, if you have math phobia, put it aside. This simple formula just shows you how much product you need to sell based on how much time you plan to bill and your given earnings goal. So $50,000 your earning goal minus $15,000 the time you plan to bill, that is the 200 hours times $75 an hour, divided by 0.4 your average profit margin, shows you that you need to sell $87,500 in product. Very simple math. But aren't profit margins falling? Well, we have strategies to help you avoid that, but go ahead and consider the same scenario at a 30% average gross profit margin. The $35,000 you need to net from product sales divided by 30% profit margin means you need to sell $116,667 worth of product. A reduction of 10% in your gross profit margin means you have to sell almost $30,000 more in product to meet your goals. Fight for those margins. Even 1% is huge. As I mentioned, profit margins, profit pools will be covered in our strategy module. The next module for you, well, now that you know what you want to earn and how much time and product you will sell to meet that number, we must return to reality. That is, the overhead expenses required to support that level of earnings. And yes, you're going to have to pay for them too, which means those time and product numbers are going up. How far up depends on your business model. It's amazing how often it is misunderstood that strategy does not just apply to marketing and the revenue side of things. The cost that you decide to place in your company, the overhead structure, those are strategic as well and have an equal impact on the bottom line. And we'll look at those next.